So let's talk about Benjamin Graham's masterpiece, The Intelligent Investor. And right off the bat, let's be clear, this is not a get-rich-quick guide, not at all. It's really a philosophy, a way to think rationally in a world that's, well, pretty much governed by emotion. It all boils down to a single, profound question that haunts every single investor. And to really get it, we're going to start with the incredible story of one of the greatest minds in history.
Okay, picture this. The year is 1720, and Sir Isaac Newton, yeah, the Sir Isaac Newton, the guy who figured out gravity, is an investor. He's got his money in the hottest stock in all of England, the South Sea Company. Now, he senses things are getting a little crazy, overheated. So he sells his shares and walks away with 100% profit. I mean, what a brilliant move, right? From a truly brilliant mind.
But the story doesn't end there. Just a few months later, he gets swept up in the mania, the enthusiasm of the crowd, and he jumps back in, this time at a much, much higher price. And you can probably guess what happens next. The bubble bursts, and Newton loses 20,000 pounds. To put that in perspective, that's over $3 million in today's money. His incredible intellect was just no match for the madness of the market. In fact, he was so devastated that for the rest of his life, he forbade anyone from even saying the words South Sea around him. So what does Newton's story tell us? It reveals the central problem that every single one of us faces when we try to invest. It's not really about how smart you are, it's about your temperament. It's about controlling your emotions. So the big question is, how do you win a game that even a genius like Newton couldn't? Well, that's the question Benjamin Graham spent his entire life answering. All right, first things first. Graham starts with a really critical distinction. Before you do anything else, you have to decide what game you're actually playing. Are you an investor or are you a speculator? Trust me, the choice you make right here, it's going to determine everything. So here's Graham's foundational definition, and it's built on 3 pillars. They're simple, but they're incredibly powerful. First, you have to do your homework, a thorough analysis of the business. Second, your number 1 goal is safety of your principal, making sure you don't lose your original investment. And third, you're aiming for an adequate return. Notice he doesn't say spectacular, just adequate. And Graham is crystal clear on this. If what you're doing doesn't meet all 3 of those criteria, it's not investing. It's speculating. And here's the bottom line, the crucial difference. The investor, they buy a piece of a business. The speculator, they're just buying a stock price. See, the investor is focused on the real-world value of that business. The speculator is just guessing what other people might pay for it tomorrow or next week. One is a discipline. The other, well, it's just a bet. And Graham is adamant. You can't be both. Okay, so let's say we've decided we want to be investors. What's the playbook? What's the operating manual? For Graham, it all comes down to one single idea, what he called the central concept of investment, and that is the margin of safety. So what does that even mean? Well, in simple terms, it means you stop trying to predict the future. You can't. Instead, you prepare for it. The margin of safety is like a cushion, a buffer that you build between the price you pay for something and what it's actually worth. Think of it as your financial shock absorber, your protection against a world you just can't control. So here's how it looks in the real world. First, you do that thorough analysis we talked about to figure out the real underlying value of a business. Then comes the hard part. You wait. You wait patiently until the market offers you that business at a big discount to its value. And that gap, that space between the low price you pay and the high value you're getting, that is your margin of safety. It's what ensures that even if you're not perfectly right, you probably won't lose money. And that's the real genius of this idea. It's not about being some kind of fortune teller. It's about admitting, hey, the future is uncertain, and then building a strong defense against that uncertainty. Because if your margin of safety is big enough, you don't have to be perfectly right about what's coming tomorrow to get a good result. Now, knowing all this is one thing, right? But actually applying it when the market is going crazy is a whole different ballgame. So how do you stay rational when everyone around you is either panicking or getting greedy? To answer that, Graham gave us his most famous teaching tool of all, a simple story, a parable for mastering our emotions. So Graham says, just imagine you own a piece of a business, and you've got this partner. His name is Mr. Market, and he's a very obliging partner. Every single day, without fail, he shows up at your door, and he makes you an offer. He'll either buy your shares from you or he'll sell you his. Now, some days, Mr. Market is just euphoric. He's on top of the world. He sees nothing but clear skies ahead, and he offers you these ridiculously high prices for your shares. He is just desperate to buy you out, convinced the business can't possibly fail. But then there are other days, and on those days, he is completely despondent. He's sure the world is ending, that the business is doomed. And on those days, he'll offer to sell you his shares for pennies on the dollar. He's absolutely terrified and just wants out, no matter the price. And the lesson in all this is so simple, but it's also incredibly profound. Mr. Market is there to serve you, not to guide you. He is your servant, not your master. You are totally free to just ignore his manic depressive quotes every single day. Your job is to deal with him only when his mood gives you an opportunity, to sell to him when he's ecstatic and buy from him when he's practically suicidal. The one thing you never ever do is let his mood dictate your own. So when you start putting all these ideas together, the difference between investing and speculating, the margin of safety, and this character, Mr. Market, you start to realize something. This book is about so much more than just stocks. It's really a guide to making rational decisions in any kind of complex, emotional situation. It's a philosophy for life. What Graham is really teaching us is that financial success is an internal game. It's all played in your own head. He figured out way before it was trendy that our brains are just wired to make mistakes with money. We feel the pain of a loss way more intensely than the pleasure of a gain, and that's what leads to panic selling. We get tricked into thinking investing is about being smarter than everyone else when really it's about mastering yourself. The biggest financial risk you'll ever face isn't in the market. It's looking back at you in the mirror. And you know what? This philosophy has been tested. I mean, really tested. Graham started on Wall Street right before World War I. His ideas were forged in the fires of the Great Depression. They were refined through another world war, and since then they've navigated countless crises, bubbles, and crashes. And the amazing thing is, his principles are just as relevant and powerful today as they were 100 years ago. Maybe that's why Warren Buffett, who was Graham's most famous student, calls it, quote, by far the best book on investing ever written. It's not a book that's just a product of its time. It's a book for all time. And that's because it's not really about the mechanics of finance. It's about the timeless, unchanging challenge of human behavior. In the end, this is the central truth of the entire book. Success doesn't come from finding the perfect stock or predicting the next market move. It comes from building a behavioral framework that protects you from the emotional whims of the crowd and, most importantly, from yourself. The intelligent investor's challenge is to prevent yourself from being your own worst enemy.